Net Quarterly Update. My name is Jerome Gray, and I will be your host. We're so glad that you joined us today, and we hope that you find this information useful. Today's call will be recorded, and once fully approved, the content will be dispersed via email to our 504 Policy Newsletter subscribers. We will also post the content on the SBA's Training on Demand webpage, where you also can find our archived Connect calls. If you have any questions during this presentation, we encourage you to enter them in the chat room because we do have a team on standby ready to respond. We'll begin this call with a word from our Deputy Associate Administrator, Ms. Diana Seaborn. Diana, the floor is yours.
Thank you, Jerome, and thank you guys for joining us this afternoon. We've got a hefty crowd, almost 1,000 folks interested in our 504, third-party lending, all of that new stuff at SBA. I don't want to take up too much time because I like to keep these things shorter and sweeter so that you have time for questions and that we're very succinct on topics. As a reminder, Jerome did indicate that these things are available to you. That part of the content today is very focused on the hold codes and servicing from the centers, the disaster centers. So please have the team join. In the Q&A, you'll see, I guess, the access to join the meeting if you want to share it with anybody real quickly before our team gets started on those topics. But keep in mind that you'll get a copy of it, and there will be a copy online for your teams to take a look at. I know this is the number 4363 is like the bane and scourge of everything that happens to us in trying to get loans done. And so this is more discussion on the things that happen around servicing and subordination, etc. So we are, as you know, and as you've heard, very busy working through both shutdowns, however brief the second one was, and thankfully to get to our activity. We have the volume. Obviously, we've had some staggering, lingering issues. We've added resources to the center to help expedite processing in the interim. We had a rush up to the end of February with regard to LPRs, and thankfully the centers, we had probably over 20 people working that, and over time we're able to get everyone who had submitted by February 28th at close of business or at 11:59, get them through and have their approvals and responses back on the LPRs that were in progress in your shop. So thank you team in Sacramento for working on that, and all of the LGPC and policy team people and everybody that leaned in to try and make sure that we didn't leave anything in the queue. And we did get quite a significant boost. I think they're used to seeing about 15 a day, and they went to 150 to 160 a day for those last 2 weeks prior to March 1st. So on that issue, we'll just say thanks to everybody, and we hope to see those loans in because they'll make a significant contribution to the performance that we hope to have in the third and fourth quarter this year. We're still looking for success stories, guys. Anytime you have something you want to brag about in manufacturing, we're going to brag along with you, and we want to highlight you and grandstand our CDCs and our third-party lenders for being so important and helpful in these initiatives. It's manufacturing, it's been expanded to food supply chain, critical minerals, and we are even creeping into the grocery store space, and we'll be providing some additional information on that shortly, as well as on international trade. We'll be doing an update to the SOP between the third and fourth quarter, probably to be effective October 1st, but basically it's incorporating much of the notices that you've seen thus far, and we'll probably see it on an ongoing basis through the rest of the fiscal year. As I said, the lion's share of the program now is going to be on hold code resolutions. OCRM has some having good review and capacity calls with CDCs, engaging them, and I hope that you understand how important you are and how much more attention you get now from the Office of Credit Risk Management and the oversight of your industry and your activity, and the encouragement from Eddie and his team. We will be traveling throughout the spring conference circuit, so we hope to see you all at one or more of those events. And with that, I will turn it over to Linda. Thomas sends his regards. He is traveling this week, but he sends his regards and his respect and affection for everybody in this program. You know how Thomas likes our 504. And Linda, I'm not sure if you're next, or should I give it back to Jerome?
So let's go with Danielle.
Yeah, we're going to turn it over. Thank you, Diana.
Oh, how could I forget Dan? I hear him next door. You know, we don't need to. We hear each other through the wall. My apologies, Dan. Didn't mean to disrespect you. Linda's my girl.
No, not at all.
So next up, we have Dan Pache, the Director of Office of Financial Assistance.
Thank you, Jerome. And appreciate you all taking time out of your day. As Diana mentioned, our format is to move these along, so please remind your colleagues that this will be available for training on demand. I did want to highlight one of our deeper dives on the working capital pilot, which we're recording tomorrow live. So if you have an interest in the 2026 update, we did issue some updated rules for that program, and it does pair really well with the 504 product, especially in the context of manufacturers, some of those critical industries that Diana mentioned. The working capital component is integral to their growth and their success, and it pairs really nicely with the CapEx financing under the 504 program. So, Jerome, on the next slide here, I'm going to cover a couple items related to the citizenship updates. And here are our conference lineup Diana mentioned. So we will be at the Southeast Small Business Lenders Conference in Savannah next week, in San Antonio next month for Melk. We have the NAGL Spring Conference in Orlando at the end of April, and then looking forward to meeting with the NAGCO members at their spring conference in Arlington in May. So we hope to connect with many of you while we're on the road, but did want to provide a little bit of update on the citizenship and residency update. This went live on March 1st. So on the next slide, again, just an overview on the change. The program, the parameters for eligibility focus on U.S. citizens moving forward. We have received several questions. We are preparing an FAQ. On the next slide, I'm going to go over a few of these items that I think will be of interest to you all. So I have 6 questions. I'll go through them pretty quickly. Again, the slides, everything will be distributed, so you don't feel that you have to take pictures of these slides right now. Can an ineligible person be a supplemental or limited guarantor? Yes. When this change went into effect, we wanted to make sure that lenders had the ability to add additional guarantors that were not required for the overall eligibility. So these can be supplemental or limited guarantors that can include the pledging of marital real estate. The second one, what is the process for adding one of these supplemental or limited guarantors? Essentially, you're going to select lawful permanent resident alien under the citizenship and country of citizenship boxes. On the next slide, next pair of questions here. Can an eligible person divest? Yes, they can. So recognizing that if they divest themselves fully of their ownership, they can, the transaction will be allowed to move forward. Next on number 4, back one, Jerome, can naturalized citizens who hold dual citizenship be eligible? Yes, naturalized citizens and dual citizens are eligible. The issue in question is if that dual citizenship is recognized by the other country. So if you do run into this scenario or any other unique ones, please reach out to the 7A questions inbox. We do have a team in there taking those questions. On the next piece related, on number 5 is related to loans that were previously approved, saying maybe in a previous fiscal year. What servicing actions can be performed? Essentially, all the servicing actions in 5057 and the lender matrix can be performed. However, when it comes to changes that would otherwise not be eligible today, so think of it as an increase in the loan amount or changes in the ownership structure, they have to comply with the rules in place, including those under the Executive Order 14159. So please keep that in mind. If you're going through a transaction that you have questions about, please reach out to us. We're more than happy to offer guidance on any specific loans that you're working on. And finally, rounding out this brief FAQ on the process, can we modify loans that have an ineligible person in ownership? So yes, again, has to be in accordance with the current policy, that is including the executive order. So you do have some flexibility there. Again, we're more than happy to offer additional guidance. So please don't hesitate to reach out. And Again, we'll be on the road this spring as we get into our lender conferences. Hope to connect with you. And as I mentioned about the WCP session tomorrow, we're also going to be doing more technical deep dives into aspects of both the 7A and 504 programs. So if you do have any ideas or areas you'd like to learn more about, or that might be beneficial for your colleagues, so think underwriters, loan servicers, approvers, packagers, et cetera, within your institution. We're going to be increasing our training available to our lenders, CDC partners, TPLs, and everybody else in the SBA industry. So look forward to connecting with you. And with that, I will pass it to Linda.
Thank you, Dan. So next up, we have Chief of 504 Policy, Linda Riley.
Yes, and a shout out to Greg and Jerome for the amazing work that they do all the time. Thank you to Thomas, Diana, and Dan for your leadership, and certainly through some of these interesting changes that we've had. They've been so transparent and helpful and so responsive, and we're very grateful for like the Q&A Dan did today. So it's a prime example. So we're going to go ahead and talk about hot topics because Diana was just on the Hill, and we're going to talk about legislation. So just to give everybody a heads up, where are we? So the decoupling 7A and 504, that's on pause. It's under review by OMB and by the House. And so that one hasn't really, we don't really have an update on that one. But we do have some updates on some of the other ones I think will be exciting for you. The Made in America Manufacturing MAMFA increase of 504 to 10 million for manufacturing that has passed the House. It's been approved by OMB, and now the Senate's going to review it. So when we talk about something you're having OMB review, that means that when it passes the Senate, it has a very easy time getting signed into law by the president. So those are good things that are being pre-staged to help us. Refi and the Main Street Parity Act, similar situation. Passed the House, approved by OMB, and waiting to go to the Senate. And as you've seen in the news, we're all waiting with a queue with a lot of other people waiting on their legislation to move forward, but we are very encouraged. We are hearing really good feedback on how pleased people are, and having the OMB to approve 3 pieces of legislation like that to get this ready for the Senate's review is really unusual for us in 504. It's a lot of activity at once, and we are beyond excited about these new opportunities. Every 5 years, you hear me talk about we have to do an A129. And, obviously those bureaucratic numbers mean nothing to you. But what it is every 5 years, we have to prove to the White House that 504 deserves to exist and that it's not duplicative of other programs. So many of you have already received our outreach on, send us your success stories. It's twofold. 1, it helps us to tell your story for the legislation we're trying to pass. And 2, it helps us to show and document how we're unique and value added to this agency and to the economic development community. And always this job creation, job retention, the ability to refinance long-term, providing longer-term amortizations. All those things help us tell your story and how, we've helped start businesses or expand businesses in communities where it's the community's main employer, or we helped community keep an employer that was maybe going to go away. So all these things are the success stories that you've been sharing with us. Share more. We're just very excited to get these in. We share them with senior management as soon as they come in. We're storing them so that we can, tell your story, tell the program story, show the value add. And so we appreciate that. And there's kind of a fun project in addition to, the heavy lift, and that's that the administrator's advanced team is going to be traveling with her around the country, and it happens to be the 250th anniversary of the nation. So Jamie Hensley's been working with that office, and they've also asked us for your historic property success stories. So we look forward to getting those as well. We put together templates to make it very easy to have, your responses. We've even gone into E-Tran and looked up, low numbers for you to help you with your responses. So thank you for getting back to us, and thank you for helping us tell your story. And it's very impressive what you're achieving in your communities, and it's an honor to be able to advance those success stories. So let's move on to, Dan's already talked about citizenship. So Diana's mentioned, we're working on Q3 and Q4 on the next SOP update. And then the Office of General Counsel is going to be doing an environmental training part 2 for us on April 7th. So we know that you're really excited about that. We always try to keep you up to date on where forms are. We are working on getting the update to 1244, so keep doing your supplemental documentation until the new form's available to address the citizenship issues. The Form 1056 and 1081 are still, you're still allowed to use those until the new forms are approved and released by SBA with OMB approval. And the last one is something June has given us. People have said that they have not felt that they could contact somebody directly on COVID idle. So he did assign an email box of an individual, Yusuf.moradi@sba.gov, and we've already been sharing this, and we've already gotten amazing feedback of how phenomenal he is to work with. So obviously, let's not flood the zone, let's not overwhelm him, but try to go through the standard protocols to resolve the issue yourself, and let's try to reserve that resource for cases where you absolutely can't go beyond that. So another thing that's been kind of in the news lately is, what's going on with the market, how are global events shaping what our 504 rates are going to look like. So now I would like to turn it over to Eagle Compliance. We have our guest speakers today, Frank Keene and Glenn Durand. So help me welcome them. And then after that, after their presentation, we'll turn it over to the Office of Program Operations.
Thank you, Linda. Frank, you are up. Let's take him off of mute. Frank, if you can unmute. Yeah, we can hear you now. Thank you.
Thank you. Can you proceed to the next slide, please? Thank you very much. Thank you, Linda, and good afternoon. There are 4 takeaways from this slide. The first being the 504 program continues its growth as it has issued 117.5 billion debentures through March. Recent months are showing increases in accelerations and prepayments, though accelerations are increasing from a history of low dollar amounts. March accelerations of 39.7 million are 21 million above their 12-month average. March prepayments of 150.1 million are 30 million above their 12-month average, and the smaller debenture sales in December, January, and February, due to the government shutdown's effect on loan processing, have resulted in a plateauing impact on the size of the portfolio, which stands at 37.5 billion. Next slide, please. This acceleration chart shows the recent increased trend in the 3-month average, increasing to 0.97% as a result of the increases from December, January, and March. Focusing on the, showing the impact of plateauing impact on the size of the portfolio, which does stand at 37.5 billion. The next slide, please. Focusing on the red line for the prepayments, though they're increasing, they remain within their daily range going to March 2023. The yellow line for debenture rates is something that Glenn's going to discuss. As you can see, their continued improvement with this month's 25-year rate of 4.59%. The next slide. Though the outstanding principal balance reflects recent static growth since the pandemic in 2020, the program has issued $33.6 billion in debentures, and I'm sure that growth will resume as soon as we get through the government shutdown processing and deal sizes continue to increase. Glenn, do you want to take it from here?
Happy to do so, Frank. Good afternoon. I'm going to provide a bit of a brief market commentary and then a couple of observations about the 504 program. Market commentary first. Operation Epic Fury, the war in Iran is now in its 10th day. I think it's fair to say that its effect on markets has been quite significant. This operation was implemented at 1 o'clock in the morning on a Saturday. The Friday before, West Texas Intermediate crude oil was trading at $67 a barrel, 67. As of this morning, it was $88.50, which would be an increase of 32%. Pardon me, it actually hit a high of just under $120 a barrel a few days ago, which was around an increase of 78%. Brent crude, $72 the Friday prior, $87 this morning, an increase of 21%. The 2-year Treasury note is up 19 basis points from 338 to 357. 10-year Treasury note up 17 basis points from 396 to 413. This morning actually hit a high of 421 the other day. And I think fair to say that equity indices, although they're just slightly down now, have been trading in some wild, gyrated-like fashions. Fair to say, I think this conflict has increased volatility. Fair to say it's increased uncertainty. Oil is this massively important commodity from a global perspective. We use it for energy, to heat our houses, to travel, to transport our goods. We use it in manufacturing, be it plastics, chemicals, pharmaceuticals. Clearly, an increase in price to the tune of 32% is going to have some inflationary effects throughout the United States and throughout the global economy. The additional negative effect that this might also have, as observed by Stifel Nicholas, is that the effect on global growth with an increase in oil price is likely to be negative. So they predict that for every $10 increase in oil prices, $10 per barrel up, shave somewhere between 1/10 to 2/10 off of global growth. So to the extent that you get a maintained $25 increase in oil prices, you're shaving about 0.5% off of global GDP. From an FOMC, from a Federal Reserve perspective, this is kind of the worst of all scenarios. We likely have additional increases in prices while the level of inflation is already above their target. A quick reminder that the Fed's favorite inflation indicator is the PCE, the Personal Consumption Expenditures Index, and it's hovering right around 3%.
I'm sorry, Glenn, we lost you. Frank, would you like to step in for him?
Greg?
Okay, Glenn, I can still hear you.
Okay, am I back on? Somehow someone removed me from the meeting.
Okay.
We need to move on. We need to move on.
Great, Greg. Okay. From a Fed perspective, the worst of all scenarios, higher inflation, an economy that's likely to slow down. Quick reminder, last Friday's employment report was below expectations. We lost 92,000 jobs. The unemployment rate came up a little bit higher than expected at 4.4% when they expected 4.3%, and the participation rate was also down. I think from a Fed perspective, this is likely to lead to a continued divided committee about whether to tighten or reduce rates. It will likely lead them to be on hold for most of 2026. If we look at the CME, the Chicago Mercantile Exchange's Fed Watch tool, they're currently assigning a 73% probability that the Fed will decrease rates by 25 basis points in September or October. So perhaps one rate decrease of 25 basis points, 6 to 7 months from now. This is a significant change from January when that same tool predicted that the Fed would decrease rates once in April and once in June. So likely to be on hold. Turning to the chairman of the Fed, yesterday, President Trump formally sent Kevin Warsh's nomination to the Federal Reserve Chairman to the Senate. It's likely this nomination will face some hurdles. Republican Senator Tom Tillis is expected to block the nomination until the Department of Justice investigation into Jerome Powell is cleared or dropped. I think it's also fair to say that if nominated, Kevin Warsh's intent to lower rates, which he's spoken about publicly, will become a tougher sell within the Federal Reserve, within the FOMC committee. So I think for now, Fed largely on hold through September or October. U.S. Treasury rates likely to remain trading in their range for 10-year notes. Let's call that somewhere between 3.95 and 4.3%. I'm going to turn to our programs for just a moment. Good news. Although there's been a lot of volatility in other markets, the agency commercial mortgage-backed security market remains receptive. Bank of America, although they anticipate wider spreads in other commercial mortgage-backed paper, still expects spreads in AAA paper, that's us, to remain stable. Could we turn to the next slide, please? Great. Our issuance, this particular slide, the 25-year debenture spread slide, shows where our 25-year issues have priced over U.S. Treasuries. And you can see that spread over U.S. Treasuries has fallen dramatically over the last year. April of 2025, we priced the 25-year SBA 504 debenture at 85 basis points over the 10-year Treasury. Last Thursday, we brought $500 million worth of that same issue to market, and it priced at 46 basis points over 10-year Treasuries. That's a decrease of 39 basis points, or a decline of almost 47%. So even if we remain in stable spread environment, somewhere around 46 or so, we're still at fairly low levels. The program spread average for the 25-year issue is 79 basis points for its lifetime. We're 33 basis points below that average right now. On the slide prior, I should have mentioned, and as you probably know, our issuance for the fiscal year is running at a slower pace. We're coming in at $4.8 billion, down 16% over 2025. I have to believe that some, if not most of this, is due to the government shutdown. Related to that, and as some of the lags are caught up upon, so might the volume in the program. Could we move on 2 slides now, please? Very good. This final slide represents our outright cost on those 25-year debentures. And the news is also good. The 25-year bond, the price last week was brought to market at $4.59, down from $5.16 in April of 25, the recent high, or about 11%. And that 25-year rate of $4.59 is 77 basis points under the lifetime program average for the 25-year debenture, which sits at $5.36. Final thoughts. Our underwriters and their investors remain very committed and very interested in the SBA 504 program and our related debt issuance, and continue to show up month after month with interest in supporting the program. That concludes my comments. Thank you.
Thank you, Glenn. So now we're going to turn it over to Kathleen Litwin, of COVID IDO Servicing Center, the director of that center. You are up.
Hi, I'm Kathleen Litwin. Can you hear me?
We can.
I'm Kathleen Litwin. I am the director of the COVID IDO Servicing Center, and I have with me today Zach Bradford, who's the deputy director, and we were going to go over a few items on the 4363 error codes that some of you may be receiving. We can go to the next slide, please. This is just kind of our overview of the topics we'll cover. Basically, what is the code? How do you address it? And then some common questions. We could go to the next slide. The 43 error code, any new applications for 7A or 504 loans, when they are input into SBA system, a check is run based on the associated applicant, guarantor, or principal based on their social and EIN. If there is a match, it may result in a 4363 error, and that would typically involve a COVID idle, but it could also involve a PPP, an RRF, a disaster loan, or one of the other programs, 7A or 504. That automatic validation check will pop up, and you would receive that error code within the system. We could go to the next slide. Once that code arises, it would need to be addressed before SBA would accept that application or before it can proceed. You will receive instructions on how to contact us to address that code. But in order for us to work directly with the lender, we would need a borrower's authorization. We will go over that form shortly and explain how to fill it out. Normally, we would request the SBA Form 2518, but we will also accept the Form 1919 for a 7A or the Form 1244 for a 504 loan. The COVID Idle Servicing Center manages a mailbox that's 4363 mailbox that you are advised to contact if you receive that error. Once we receive an email in that box, we will review the matter and provide information on either we may need documents or what we need to move forward or to proceed with our review. I will come back to the typical items that we may request or the process in a couple slides. If we're unable to resolve the 4363, the compliance issue, that code will remain on the account and the new application will not be able to proceed through the system. It will also apply to any new applications or additional applications that you submit on behalf of that same borrower, principal, or guarantor, whichever caused that link. These are some of the common compliance issues that we're coming across. It could be a general eligibility issue, but it could involve a fraud scenario. It could involve misuse of their loan proceeds, seizure of their loan proceeds, conversion of their collateral. We may have received a complaint, perhaps an identity theft complaint. We may have identified a compliance issue and added a flag to the loan directly. It could involve inability to document the business existence, or tax documents do not match with the information claimed on their application, receiving more funds than they were eligible for, other possible false statements, or fabricated documents. So it's an entire big list of items that could be causing this error code. Once you receive that error code, you'll email us at that 4363 mailbox. We will, we request that you include that third-party authorization if you want us to communicate directly back with you. Otherwise, we will work directly with the relevant borrower, guarantor, or principal who has that alert. This is kind of the life cycle. It just talks about you get the error message, you contact us, we'll review the matter and or request documents. We will then either resolve the issue, in which case you could resubmit the application and it should go through without any further error code, or we'll be unable to resolve it, in which case the application would not be able to proceed. The borrower authorization, we have had some issues or questions about how it needs to be completed, so we've included a few slides here, but it is important that it does have to be signed. We will accept either wet signatures or e-signed with the proof of authenticity. So proof that it has, for example, the DocuSign, proof of that electronic signature. And it does need to be signed by all borrowers, principals, or guarantors. So that is one common issue that we're coming across when these forms are submitted to us. This is a sample of the borrower's authorization. This is the 2518. Again, we will accept the versions that are in use for 7A or 504, but this example here shows how we request that it should be completed. So what do we do if we receive in your request and the authorization? The first thing we're going to do is see, do we need documents? And a common item that we do require is tax documentation. We may not have all of the tax documentation that we need to support the business operations. We may also request some additional documents. It could be pretty involved. Based on that list I showed you earlier, because the compliance issue can come from many different places or have many different causes, I can't tell you up front something that we would always need to resolve it. It really just depends on what caused that initial compliance code in the first place. If we need the tax documents, we need a specific type of documentation. We have had some issues in the past where there were questions about whether the documentation was available. So if it is business income filed on an IRS Form 1040, you would go to this link and follow these steps to request the documents, or the borrower would. And then you would be able to email those to our mailbox, that supporting documentation. If we need taxes that were filed on a 1065, 1120, there are a few different ways you can approach that. We're going to go through each very briefly. But the first option is they go to the IRS website, they create the account and make a request for a tax account transcript, not a tax return transcript. And that's where a lot of previous issues have come about. It definitely needs to be the tax account transcript, and they would need to select 2019 and enter no to the question about a CFN. And then they'll search and scroll down to find the specific form to request. Option 2, they can call the IRS and specifically request the 2019 tax account transcript. They would need to fill out the 4506T and mail or fax that form over to the IRS. Once it's received by the IRS, they will typically mail that out within 10 days. And notice I said mail, so this version is slower. Once that mailed tax account transcript is received, it can be scanned and emailed in to us. And remember, the tax account transcript is available for more than the last 3 years. If you select any of the other types of tax account transcript or other types of tax transcripts, it will only give you the option for the last 3 years. And that's why we've had several requests or questions on this topic. Is it's got to be exactly this format to be able to get the information that goes back to 2019. And then if those two options do not work, there's one third option, and this one is a little more complex. We can go to the next slide. And this is to fax an internal transcript of the return. And we've outlined those steps here. They would, the borrower would call this number and request the 2019 TRDBV transcript. And then it includes instructions on how to walk through that with the IRS agent. Once it's received by the borrower or guarantor or principal, they can then scan it and email it to our mailbox. If they filed a 1065 or an 1120S, they'll also need to provide the documentation for those tax returns or tax account transcripts. So it would be necessary for each type of filing that they are doing, as well as their personal tax return and tax account transcript. These are our most common questions, and we will take a few questions at the end as well, but we were trying to include the most common things coming into us. Will paying off the loan resolve the issue? Sometimes. We will consider that on a case-by-case basis. We really have to look at the loan to see what the issue is before we can determine if paying it off could resolve the issue. How long does the review take? When you first send us the request to the mailbox and you include that borrower's authorization, we will complete that first review within 24 hours to say either we need documents or this is the next step. Once we have those documents and we're able to review them, that review takes 72 hours. So the first step is the initial 24 hours. We would then turn around and say, okay, we need XYZ documents. Once we receive those documents, 72 hours. How long after the error code is resolved can the lender proceed? Once it's cleared in the E-Tran system, it will be gone and you will be able to resubmit that application. One thing I want to make clear, we aren't going in and removing an error code within the system. We are clearing the compliance issue. That compliance issue will then not trigger the 4363 error code. So that I just want to make that clear that we're not like overriding or removing this error code. We're removing the trigger. Do we have a secure mailbox? Yes. If you do not want to send the documents to the 4363 mailbox, you can also use box.com. We would need to send that link to you, so that would take some additional time, but we are happy to do that. You can reach out to us for that information. Can you upload the documents into E-Tran? Yes, you can also do that, and we can access them within E-Tran. We just need to know that they're there. So when you send us an email to the mailbox, you can advise us, I've uploaded these documents to E-Tran, or you could say, I'd like the link to box.com so that we can upload them through the secure site. What if a borrower says the compliance issue is resolved, but it's still present? It's possible, it's timing, but we may still have to investigate the issue. It could be that a different party is triggering it this time. It could be that there is a separate issue, so we will have to review those. The validation error only shows one tax ID number. So just keep that in mind. We will review any loans that we believe may be triggering the error code. But it is possible that you may only see one tax ID when there could be multiple tax IDs that are actually triggering that alert or that error code. Why do guarantors need to be cleared if they're only a guarantor for the loan and not a principal for the applicant? The 4363 will be triggered by Social Security number or EIN or tax ID number. The trigger does not change due to someone being an entity or only listed as a guarantor or principal. So if they are an owner, a principal, a guarantor, or the borrower itself, that code would trigger. There has been questions about some of the other error codes and what do you need to do to resolve them. If the loan is showing up on Cavers or do not pay, you can contact us directly at the COVID Idle Servicing Center, or if you happen to route it to the 4363 team, we will then send it to the internal team that handles those inquiries. 4293, you would contact 504 questions. Code 4038, you will contact 7A compliance check, which may not be relevant for the people on this call. Code 2087, this has to do with the borrower's payment history on a previous loan. They would need to log into their My SBA loan portal to make a payment and bring their account current. If the loan has already been referred to Treasury for cross-servicing, the borrower will, they will need to contact us at the COVID Idle Servicing Center. But once they are already with Treasury cross-servicing, it is less likely that the issue can be resolved without payment in full. And if their loan is with Treasury cross-servicing, they will have to contact Treasury to make those payment arrangements and to resolve the issue. Once that payment clears with Treasury, they will report that payment back to us, and then the loan in SBA system would move to paid in full, and the code would no longer trigger. If the loan is not yet at Treasury cross-servicing, it's possible they can resolve the issue by bringing it current. So that's when you definitely need to reach out to us. Could be a Treasury offset only, and we can still fix that. We can get that resolved with a payment. There's also the relatively new code 4463 on citizenship, and you would contact CAF's questions for those. This code is so similar to 4363 that we have had a few requests come into the 4363 box, and we are redirecting those to the appropriate team for handling. And I think might be our last slide.
That was your last slide. And so we are now going to open it up. Thank you, Kathleen. We're going to open it up for Q&A.
Jerome, before we get started, there's a typo on the slide where we're talking about legislation on refi. It should say pass the House, the Senate will now review. So that was a typo. I just want to reassure everybody, and I've answered everybody that asked about that in the chat. Also, too, the Form 1244 and 1919 are in development. They're over to OMB for review and approval. That can take about 90 days. So the addendums that you're using now and the additional supplemental information that you're doing now, continue to do it until we send out a new notice that those additional processes are no longer needed. And we got a couple of questions in. Let's start, since we're on the COVID idle topic, let's start with the questions that have come in on theirs. Do contractors know it is okay to read all COVID loans? I had one rejected that after being told to include that language. So you can probably see that question in the chat. So. And I'll move on to another one while you're thinking about if that's even I'm sure that they do know that you can read the whole file. And obviously we have to fix a couple of typos, and there's always some things we have to do before we circulate the slides. I'm going to come back to Sacramento next, if you don't mind. A question again for the home cold resolution team. They received a 4363. However, the feedback from the resolution 4363 team stated that they were not able to move forward and that there was nothing else that could be done. So what would you recommend in those circumstances?
That is possible, and that means that they will not be able to proceed with any future assistance. So we would defer to the lender on what the next steps would be. If SBA cannot proceed because the error code is still present, there's not an override or any other way to progress that application through.
And as much as we all try to get to yes, sometimes there are things that the borrower discloses to us over time and we find it out and we get to a no. And you know, that sometimes there are things that we cannot overcome. So the best thing I say is that be as transparent with your borrower as possible. If something comes up, just get back to them right away, give them every chance to mitigate it, but to be honest with them. If you get to a dead end on something that cannot be mitigated, just be honest with them, because sometimes a no in a timely manner is much more kind than a maybe that drags out.
Right. And in all fairness, Linda, the borrower needs to be transparent to our CDCs and our third-party lenders.
Absolutely.
If you get a hold code with no explanation that says you may not proceed and we will not have any further discussion, that's a huge red flag to you, that there's something seriously wrong. There could be a case open. They could be in litigation. DOJ may be reviewing. But when they tell us, or the FBI, the answer is no, go away, that's what we have. And so
Yes.
it should be an indication that there's a serious problem or a very serious mistake. My guess is that most borrowers, like it or not, know what's going on with their other loans, with their other business, and choose to try and not have to go through that to justify or to cure it so that they can proceed with the loan. So, you know, we would love to be able to listen to all the stories that FBI or DOJ or the CIA and everybody has that get involved in these fraud and these compliance hold codes. But when we get an answer from one of those, you know, legal entities that says no, and that's it, then that's it, guys. There's nothing we can do. But it is indicative that there's a serious problem.
Right. And Dan, we got a couple back to back. I think would really be great. And kind of, I think you might have answered these in your Q&A, but it helps us to reinforce. It says question 3 references the 6-month look back. If someone divests, do we have to wait the 6 months to apply?
So the 6-month look back applies to change of ownership scenarios. However, if the change of ownership involves an ineligible person, specifically an LPR, who's divesting their ownership. Excuse me. Sorry. Of course, allergies are ramping up here in DC. If they divest themselves fully, the 6-month look back does not apply and you can move forward. So again, normal standard situations, yes, 6-month look back when it comes to changing ownership before the application applies. However, with ineligible persons, specifically with that LPR category in mind, we are allowing the transaction to move forward upon full divestiture.
Sure. And Dan, if an LPR divests, can the individual remain as an officer, employee, and or consultant? Once again, I think you answered that in the Q&A, but if you don't mind reinforcing it.
I think I missed Greg's answer too. So yes, there are no restrictions on an LPR being an employee. I think what were the categories? Officer, employee, or consultant. So no restrictions there. Thank you, Linda.
We do get questions from time to time about what are the current application processing times at SLPC. And, you know, I'm going to say they're faster than they've been considering the huge amount of volume. And as Diana said, the center was given overtime. They worked day and night to get those, green card holder issues resolved before March 1st. They've done yeoman's work. And is there anybody on the center that would like to talk about how things are working on processing, and also too, what can a CDC do on their side to help the processing go faster? Dane or John, if you're still on. Okay, we might have lost them.
No, it's Peter here.
Okay, thank you, Peter.
Can you hear me? Okay, yeah, we are trending in the right direction, both when it comes to, origination as well as 327s. We have had to move some resources out of 327s into origination, so we have seen the number of days climbing a little bit on the 327 side, but we do expedite those that are coming up for funding. So if there's something that is not really, really urgent, it sort of sits in the queue. But those that are urgent as far as funding is concerned, or sending them off to the closing council, we expedite those. But we were at high of about 20 business days, and we are running around 10 business days right now on the origination, and we're seeing that trending downwards. That obviously does depend on the number of loans we get in each day, so that fluctuates a little bit. But with the INS or the LPR situation behind us, we are putting all our resources into reducing the inventory as much as we humanly can. Now, what can the CDCs do to help us? That the low-hanging fruit is always make sure your loan applications are as well done as you possibly can, because when we have to screen out or decline loan applications, that not only takes a longer time than approval, but we have to then start reviewing these files again when they come back in. So yeah, anything you can help us to sort of mitigate the inventory and turn times really comes from the quality of the loan applications.
Hey, Peter, since we have you on the line,
Yeah.
quick questions on the LPR as a supplemental guarantor. Do they need to get INS clearance?
No, that would not be an INS clearance. We don't do any clearances right now, so.
Thank you. Okay, Linda, I don't see any new questions right now. Do you see anything else?
No, I just want to thank all the presenters today for doing a terrific job. And Dan, on that Q&A, I think that's going to help everybody. And certainly with the lender conferences coming up, we'll continue to circulate that. I'll apologize to everybody for my typo. And obviously we always try to get to yes. We always try to help everybody resolve, issues. Our goal is to always process things as fast as we can, as resources allow. So that is our commitment to you long term. But we appreciate that people have been working with us with some of the, recent procedural challenges. We're transparent with you, you're transparent with us, and together we get to the better place. So Dan, did you have any closing comments you'd like to share with the team?
No, I think we covered it nicely, Linda. Thank you all.
Well, thank you, everyone. Please review the slides for upcoming events and connectivity. This will conclude the 504 Quarterly Connect call, and we look forward to seeing you at the next one. Thank you.